Most traders suck at trading because they are missing this one simple concept. That's why in this video we will go in depth on how it will change your trading, how to execute it day to day, and finally look at real trade examples so you can finally start making money from the markets. Let me ask you a question. What is the difference between these two trades? The first trade is inside of an uptrend. It is Monday, there is no news, and we are in the month of December. The next trade is inside of a downtrend. We've been trending lower on this particular asset for months. We have news coming out, and we are also inside of the month of May. The main difference between these two trades, which affects the win rate, is context. These two trades, even though they look totally identical, have very different market conditions. Most traders are actually gamblers and lack context inside of their trades, which leads them to take loss after loss after loss inside of bad market conditions that they do not know how to navigate. This eventually leads to them quitting trading altogether and going to something else, like another stream of income or something like that. So, how do we form context so that we can avoid being like those traders? The first way on how we can actually identify context is by looking at higher time frame market structure. So here we have gold. On higher time frame market structure, what we need to see is that we are either making higher highs and higher lows or lower highs and lower lows. This helps form our bias, and this is the first part of context. So if we zoom out on gold here, we can see that for the past couple of weeks, we were respecting higher time frame bullish structure. We were making higher highs and also higher lows in the form of an uptrend. So this forms our first bias inside the markets, is that the context on gold, the higher time frame where the orders are flowing to, was bullish. If we zoom in though, this is the 4-hour time frame as I said, we see that structure was broken at right here on this level. So at this level, we broke structure on the higher time frame, and then we started selling off. So this goes into the context as well. We were bullish, and then structure broke, and now we are forming a selling bias. So the first key is just looking how market structure is so that we know the conditions. Now, if that was the only piece that we used, we still would not be profitable. We need the other pieces that I'm about to go over in this lesson before we have the whole context on a specific asset. So after we identify market structure, we then want to pay attention to what are the different fundamental events happening inside of the economy. For fundamentals and news, we want to first look at intraday news, and then we want to piece together the overall bias that the news is leaning towards. So I'm going to explain this all to you guys right now. So this was this week. Right now it is June 20th. On Friday we had no news. The day before though, we had FOMC on Wednesday, and on FOMC we kept rates the same. This is important because we know a lot of bigger institutions, bigger people, banks inside the economy were looking at this interest rates to see whether or not the Fed would cut rates. This week we also had core retail sales coming lower for the dollar. And then that was it in terms of major fundamental news happening this week. We've also been having a lot of headline news because of the war that is happening between Iran and Israel and the developments that are happening over there too. So a good website that I like to use for headline news is called FX Street. If you go to FX Street and you type in the specific asset you want to look at, you can see the different headlines that are happening for that specific asset. So for our fundamental, we have Iran versus Israel. We have interest rates staying the same. We have news coming out slower for the dollar. And we also have the dollar falling. I didn't write this down before, but we also have the dollar falling as well, and people kind of moving to more different types of assets. So we have all of these things. So once you write down all of the different fundamentals that are going on, this is specifically towards gold. So if I was trading a different asset like NQ, YM, ES, I would write down the different fundamental things that are happening with that specific asset. So we have these different fundamentals things. Now, out of all of these different fundamental events happening right now, are we bullish fundamentally or more bearish? We can add more like sentiment or the amount of institutional buying happening, but we're going to keep it a little bit more basic. So if we go down the line, we have Iran versus Israel. That is overall bullish for gold because when war happens, people tend to want to invest in gold. Interest rates staying the same is bearish for gold. News slower for the dollar is bullish, and the dollar falling is bullish. Now this isn't price action wise, like this is just fundamentally bullish. It doesn't really matter what price action is doing yet, because price action over the long term is going to follow the overall fundamental theme. So right now, the fundamental theme is leaning to a more bullish position on gold. So for context, right now, we have two things. Number one, price action. We have market structure. And then number two, we have fundamental themes. Now we're going to go to the next important step when identifying context. Now I'm going to show you guys a losing trade that I took, but I'm going to tell you guys why I actually lost that trade and what was happening during the time. So this is a similar trade where we had taken out liquidity, London low on this day. We had a rejection right here. The market had been overall bullish just because of what was happening inside of the Middle East. So I was looking forward to getting this trade. I waited for a break of candlestick, and the trade ended up stopping me out. So at the same time I was inside this trade, some news about war tensions easing a little bit came out, which stopped me out of this trade. Investors sold gold off, and I lost. So if I would have known that, I probably would have been more wary, looking at levels a little bit differently. But that's just to show how these things can change, how context can kind of moment to moment. Here is another example of a trade right here, where we have, first, we know that gold is overall biased structurally on the higher time frame. This was a week before the other trade where the whole war situation was more fresh. So we know war causes gold to be more bullish. So we come into the markets, we mark off our strategy, which is marking off session-based liquidity. We're looking at Asian high and also Asian low, and we plan to take this trade during London. During the first hour of London, we see a sweep cleanly below Asian low. This matches our fundamental buys because we're looking for buys. We would get inside of the trade right here and then hold for higher. And you can see that the trade actually goes very crazy. So that's just another example of a trade. Now you can use this context to be able to take a trade, or you can also use it to avoid trades. Most traders take these setup trades, but they don't know how to filter, so they just end up taking every single setup that comes across. So on this day, I'm going to show you guys a setup that I didn't take because the context wasn't right. This was the last trading day, which was Friday. We had, see right here, we had this supply zone. Price low-key still respected it, even though we wicked it. So I would get inside this trade because we're above London high as well. Right here, we're above London high. We haven't taken out Asia low as well. And we took out Asian high right here as well. So this is all cool for my strategy. I'd get in like right, but things that were happening. Number one, if I'm looking at order flow at this time, even though I can't show order flow right now because the market is closed, on heat map, buyers were buying, activity was being respected. Even though we had a huge sell level up here, the buying was being respected more than the sellers. So that was the first reason why I did not get inside of the trade. The second reason why I did not get inside the trade was because fundamentally it's more bullish than bearish. Like fundamentally, it doesn't even make sense for me to get inside of any sells. I'm an intraday trader and I like catching bigger moves. So I want to be a part of that bigger expansion moves, which has to have a fundamental context to it. So if I would have took a sell right here, let's say I took a sell right here, even though I wouldn't have lost, the trade isn't really doing anything. And I have a sure when we open up on Sunday, I know that this trade is more than likely going to lose, just because of the things that I just mentioned to you. I'd be surprised. We might go down, but just like fundamentally, we're more bullish than bearish right now. Things can change, but as of right now, we are more bullish than bearish. So that's why I stayed away from this setup and I did not take the trade. All right, so now that we have everything put together, let's go over everything so we can just put it over. So we need context, and context is formed out of these things. More go in depth into each one of them, but generally we have these things, and when we put things together, we can have good context. You can add more, but these things would be enough. First, we need market structure, and then we need fundamentals. We need order flow so that we can see where the orders are actually at and not just rely strictly on price action. And then after all of that, we then go to our setup. This all creates our context, and this is how we will keep consistently winning. Now, if you guys enjoyed this video, make sure to comment down below. If you guys have any questions, I'll get back to each and every single one of you guys. That's it, and I'll see you guys in the next video.